Mahantesh, Kunal has given the technical setup that for banks, large beholders of these stocks are now panicking or they're tired and they're selling the stocks. Looking at the case what we made, deposits are down, CASA is down. Is there case for banks now to underperform?
No, I don't think so. I think the problem with the bank is now they are readjusting to the new reality. You're right that the CASA ratio is down. Even the NIM, I think the major problem with most of the banks is from a sequential basis, the NIMs have fallen by about 10, 11 bips. So the basic issue with the banking business is that when your NIMs get compressed, you need to have a volume growth. NIM is like the margin and the advances growth is like the volume. The volume of these banks are not growing as sufficiently as it was before because the deposit growth is pretty much muted. Now, it's a chicken and egg story. If you want higher deposit growth, you need to offer higher deposit rates, which would mean further compression of NIMs. I think this readjustment is what is really happening with most of the banks right now. Probably it is a 3 month, 6 month kind of phenomenon. And once we are through with that, the banks would be in a better position to not only grow their advances, but have better NIMs as we move ahead.
Mantesh, it's difficult to go negative on a sector which in a sense is a clear proxy on economy. But anecdotal data, if I look at it, car sales, unsecured loans, and slowdown in some categories of retail credit. Could we be at the early sign of some concerns in the second half for the banks? Because markets thought that come Jan 2024, FIs will come, credit growth will pick up, and NPAs will never come back.
So I think, even within the retail book of the bank, I think what is plaguing them, you rightly mentioned about things such as the personal loan category growing very large. But for me, the more important figure is that the mortgages or the home loan side business is actually kind of growing quite weak. But within that also, if you look at across banks, you find different rates of growth. Axis Bank, for example, home loan portfolio has grown just about 10%, whereas on the ICICI Bank side, if I look at it, their home loan business has grown about 15 odd percent. Some of the POC banks have done even better. So this tells me that this entire readjustment that they are doing in terms of the rates that they're going to charge in the market is creating this disruption. Home loan growth is still strong for the industry as a whole. It's just that some of the banks are growing faster, some of the banks are growing slower. Once we see through that two quarter kind of phenomenon, most of the banks will return back to that high growth number, readjust themselves to the market share kind of thing. And since you mentioned economy, proxy, banks being the economy proxy, within that economy, it is the home loan segment which is actually really this proxy because that's an indicator, large indicator of the consumption ahead. Once one is secure, once one individual is secure with a home loan, the consumption growth naturally starts picking up. So I'm looking at at a phenomena that says once we start recovering on the home loan growth side, we should see most of the banks through. And India being a very strong economy, that proxy linkage will still continue to remain strong.
All right, Mantesh, appreciate your time. Thank you so very much for joining us. Let's